Hello, and welcome to Need to Know, your weekly investment podcast brought to you by the experts at Coutts. I'm Sarah Muir, and I'm joined for this special budget-focused episode by Irene Wolstenholme, Head of Wealth Structuring at Coutts. Welcome, Irene.
Thank you very much, Sarah. It's lovely to see you again.
It's lovely to have you back. We've been seeing a lot of each other over the last few days, haven't we?
There's been quite a lot going on with all this budget, yes.
There certainly has been a lot going on. Now, Irene, last time we were on, we've got a new introduction now to Need to Know. We always like to start with a quick fire numbers round. So I'm guessing this is going to be a budget-related number. What's your number?
So yes, I have a budget-related number for you. It is 4 hours and 45 minutes.
Wow, okay. Tell me what that is.
So 4 hours and 45 minutes is the longest ever budget speech, which was performed possibly by Gladstone in 1853. Apparently, he was fortified throughout with a mixture of sherry and egg beaten into it, which sounds fairly disgusting to me, but there we go. That's 4 hours 45 minutes.
Now, actually, mine is related to that. Mine is 45 minutes, and that is the shortest ever budget speech, which was by Benjamin Disraeli in 1867. But he also does claim to have the longest budget speech, but his had a break. He had a 5-hour speech, but he did have a break. Obviously, he wasn't on the sherry and beaten egg. That's obviously what kept Gladstone going. Okay. Now, I normally limit guests and co-hosts to 3 things on the podcast, but this budget was so important. I'm going to waive that rule. So let's not waste any time. What do you want to talk about as far as the budget is concerned? What are the key things that we think we want to highlight?
Yes, you're absolutely right. So we'd have liked to condense this down to 3 things, but that was just not going to happen this time. I'd like to talk about employers' national insurance. I'd like to talk about changes to capital gains tax. I'd like to talk about some changes to inheritance tax.
Yep.
And then my extra ones, some stamp duty land tax changes. And then I'd just actually like to have to finish off with just a few things that haven't changed at all, where we might be expecting them.
Yeah, okay, that sounds good. Let's start then with employers' national insurance tax. Now, this was heralded as the biggest tax raising budget since 1993. A lot of that tax raising is going to be shouldered by employers' national insurance contributions. Just talk us through that.
Yes, it's going to be well over £20 billion that is supposed to be being raised by these the increase to the employers' national insurance contributions. So basically, the government is going to increase the rate of employer national insurance contributions from 13% to 15%, with effect from the 6th of April 2025. So that's April 2025, the next tax year. So that's is going to mean that anyone who employs any company or business or anything who employs someone has to pay national insurance, has to pay secondary national insurance, is going to have to pay more. Not only are they going to increase the rate that you have to pay, but also they are decreasing the threshold. So that people are going to have now to pay national insurance contributions, employer national insurance contributions, when the employee is paid more than £5,000 a year. Now, there are a couple of measures to try to protect the very smallest businesses, but anything from other than the very smallest will find that they have an increased employer national insurance bill, and in some cases really very, very substantially increased national insurance bills, because of course if they're going to try and raise over £20 billion, it's got to come from somewhere. So that's very much the thing that seems to be doing the heaviest lifting, as they say.
Okay, so that's the employer national insurance contributions. That's going to be going up as of the new tax year in 2025. Now, the next one you want to talk about, that's effective as of the day after the budget.
Well, the day of the budget, in fact, really, on the 30th.
Yeah.
So this is the changes to capital gains tax, and in particular the rises in the rates of capital gains tax. Now, we've had so much speculation about this. It was absolutely unbelievable. We've had things from no changes at all up to income tax rates, which of course have happened in the past with capital gains tax. In fact, what's happened is that they've changed the rates from 10% to 18% if you're in the lower band of capital gains tax. So that's basically if your income plus gain comes to lower than the basic rate of income tax, basic rate threshold for top of the basic rate threshold for income tax. So you have 18% in that case. If you have slightly more income and gains, then basically your rate used to be 20% and is now 24%.
Because I mean, that's an important one, and we'll come to this probably when we come to different things. Not everything, as you say, that's the one thing that is effective straight immediately, but a lot of the other things will have to go through their normal process in Parliament before they become law.
Absolutely, yes. So there's all sorts of processes in Parliament. This is the budget will now go through the normal processes and become law. And generally the things that are going to come in sort of 2025, you would expect not to change much. They might have the odd change along the parliamentary process if someone notices a defect in the legislation, or if there's something that's really obviously doesn't work, but normally that'll be the same. However, there's quite a few things that were announced that are due to come in either next year or even the year after, and they're subject to various consultations. Some of them are really quite complicated to get sorted out. So not everything's happening immediately.
Okay, all right then. That brings us then to the next one, inheritance tax. Now, what happened? That was another big theme that people were talking about going into the budget, and again, there were quite a few concerns and fears around that.
There certainly were, yes, and there are two big changes to inheritance tax for most people. One is to do with pensions, and the other one is to do with business and agricultural property relief. Now, the pensions one isn't actually set to be effective until April 2027. And as I say, there's a lot of consultation. There's some sorts of papers out saying how they think it will work, but there is quite a lot of things to work through with that. But the idea is that where you now have a pension and you die and there's still money in that pension, then currently it is not subject to inheritance tax, and in the future it will be.
Was it fair to say that was a bit of a surprise, that one, wasn't it?
Well, I'd heard rumours about it, but it certainly will make a lot of difference to the way people have to think about their pensions, particularly if you're the sort of person that doesn't need to draw down on your pension and was thinking that they would mainly have it to pass to your heirs. So that will mean that you have to do a bit of thinking about what should happen now.
Okay, so let's talk about how the changes as far as IHT are concerned for agricultural property relief and business property relief. Just talk us through those.
So these reliefs have been around for a very long time. They are basically reliefs if in your estate there is either an unquoted trading business or unquoted, well, obviously unquoted, but agricultural land and an agricultural business, which sometimes could extend to the farmhouse in some cases. Now, for what the problem, of course, is particularly if someone dies unexpectedly and they hold these sorts of things, they don't want to have to sell the farm or the business just to pay inheritance tax. So for many years, there has been a relief to say, if you have these particular assets and they are within your certain criteria, then you won't have to pay inheritance tax on them. Now, the changes that they have made is that for deaths after April 2026, then the first £1 million worth will still be completely exempt from inheritance tax, or that will be fully relieved, to be technically correct. Anything above £1 million, you will only get relief on half of the value. So if, for example, you have a £2 million business, the first £1 million is no inheritance tax. The second £1 million, you'll have to pay inheritance tax only on half of it, so only on 500,000.
Right.
So there's still quite a relief, but it is not a total relief. And again, that will mean that people have to revisit their planning if these assets were likely to be in their estate on death, and have to think about how they can cope with that, how the inheritance tax can be paid or whatever.
So it'd be an effective tax rate then of 20%. Is that correct?
Absolutely, yes, on death, yes.
Okay. And what about AIM and AIM shares?
Oh yes, AIM shares, of course. So AIM shares have come within business property relief again for many years, on the basis that AIM is not officially a quoted market. It doesn't count as anything held on the AIM market doesn't count as quoted for inheritance tax reasons. Basically, they're saying if you have one of these shares that would otherwise qualify, it's on AIM market, we're only going to give you, again, 50% relief. So in practice, you would pay 20% inheritance tax on death rather than 40%.
And just clarify, AIM is alternative investment markets. Is that correct?
That's correct. Yes, yes.
Okay, that's good. And again, I think the AIM one was one that there were concerns, weren't there, that there was going to be potentially no relief at all on AIM shares.
Yes, that was certainly a concern. Yes. So yes, some people were less unhappy than they might have been.
Yeah, exactly. Or less unhappy than they might have been as well,
yes,
I suppose.
Yes.
If we take the glass half full sort of way of looking at things. Okay, let's come to the next one then. Stamp duty land tax. Now, this was probably, I feel like this sort of slightly went under the radar, but there's some quite big changes here, or potentially some quite expensive changes here.
Absolutely. And these are for people who are buying a second home. So that might be to buy to let, or it might be as a holiday property, but a second residential property. Doesn't matter whether your first residential property is in the UK or maybe abroad as well. It's if you have a second residential property, there's already a surcharge on SDLT, stamp duty land tax, for those people. That's 3%, and that's going to go up to 5%. That's quite a lot of extra money to find at the same time as buying one of these second properties. And that's, that was quite a surprise, shall we say.
I was going to say that wasn't really on anyone's radar going into this budget, I don't think, was it?
I hadn't seen any talk about that particular one.
Okay, well, that's what was discussed in the budget, what changes were introduced in the budget. But I know you wanted to talk about a few things that actually didn't change, that maybe a lot of people had expected would change in the budget.
Yes, absolutely. Now, first of all, I'm going to cheat very slightly and talk about the cessation of the non-dom scheme. So that had been pre-announced. It's built on something that the Conservatives said they would do it last March, and then the Labour Party said they would confirm that they would do in July. And basically, the general idea to take domicile out of the tax system and make it a system based entirely on residence hasn't changed. We have a lot more detail now, and there's a huge amount for people who are interested in that sort of thing to be working through, and anyone in that sort of situation should give their advisors just a week or so to work out what's happening, and then start really planning, because we actually do know what we can do now. Other things though that didn't change, things like there was a huge amount of rumours about pensions and whether the rate of relief on pension, income tax relief on pensions, might change. Absolutely nothing at all about that. About whether there might be some sort of restriction to the tax-free cash from a pension. Again, absolutely nothing at all about that. Another thing was inheritance tax. There's all sorts of rumours about whether the lifetime gift regime, where you can give what they call a PET, so a potentially exempt transfer of some sort of assets to someone, as long as you survive 7 years, then it's not in inheritance tax. So there was a lot of idea that might change to, for example, 10 years, or it might be abolished, or there might be some sort of tax on the recipient, or there might be anything like that, but absolutely nothing at all changed there. So that was quite a relief for people who were worried about that. And then finally, ISAs. There was quite a bit of suggestion that there might be some sort of limit on the amount you could put into an ISA, or there might be some other sorts of regulatory changes. Now, they did say that none of the limits were going to go up, but basically everything carries on as before with ISAs and junior ISAs and all of that suite of products and laws, really.
Thank you very much, Irene. I really appreciate the time you've taken, because I know you're very, very busy at the moment, and there's still a lot of of papers to go through to really drill down into a lot of the detail here. So what we've hopefully been able to do today is give you a little bit of a sort of some of what we think are the most important or interesting aspects of the budget. I would say final word to you, Irene. What would you say to anyone who wants to know more about how the budget might impact their own personal situation?
Well, it's always worth asking someone who is qualified, who knows what they're talking about. So whatever you do, don't just talk to the person next to you in the pub unless they happen to be a private client lawyer who really knows what they're talking about. Do go and speak to your accountant or your lawyer, and make sure that you're getting information from someone who understands not only what's been written here but all the background and can talk about the nuances. I think that would be my top tip.
Absolutely. Wise words, Irene. A reminder that the views expressed in this podcast are not intended to constitute investment or tax advice, for that matter, are accurate at the time of recording and are subject to change. Thank you for listening. Until next time on Need to Know, bye for now.